Hello, everybody. Welcome, welcome. Can you all hear me? If you can hear me, just type into the chat where you're located and where you're coming in from. I always love to see that. And I always love seeing the regulars here. I actually can't see your name unless you put it in the chat. So all I see is the number of viewers. So if you want to say hi, feel free. See, we've got a little over a dozen people in here so far. Anybody from Intel? I got some people this week telling me that Intel's internal network was giving them problems again. Did anybody have that experience? Hello, Rob. Good to see you. CC, yes, you had problems with Intel's network. This is not good. I don't know how I get off their problem list. Gauresh, did you have any problems? Hello, Keisha. Gauresh did not have any problems. See, this is also the complicated thing. Sometimes some people have problems and other people don't. So, and since it's on the Intel internal network, there's nothing I can do about it either way, as far as I know. All right. Welcome, everybody. We are going to take the next 5 minutes and just get started. John, I see that you did share your screen, so that's good news.
Cool.
I can make it accessible to people in a moment.
Okay, can you see me as a video or?
Yep.
Okay.
Yeah, we see you. Are you looking at the screen as well?
I am.
Okay. And you should know that I can act as a moderator too. So as people ask questions,
that'd be great.
As people ask questions, I can follow that for you, and that way you can, and I'll judiciously interrupt you during your presentation, or we can hold the questions all to the end. But that way you don't have to concentrate on it. You can concentrate on your talk.
It's okay. I mean, it's you can, if someone has a question they want to ask on a particular slide, absolutely, let's do it.
Okay. Looks like Eric came in through alternativeinvestingclub.com/live. Keisha stopped using the Intel way, I'm assuming, and it's just going to the website. Which, if you are still subscribed to the Alternative Investing Club with your intel.com email address, I would really appreciate it, and I encourage you to change that over to whatever you use as a personal email address, whether it's Gmail or Yahoo or live.com or your own domain, whatever it is, change it over there, because we're having enough trouble with Intel that, you know, at some point Intel may just not work. So I'm pretty sure that Gmail will continue to work. So go ahead to alternativeinvestingclub.com, and at the very top section, there's a subscribe to our events, and you can just put your email in there, and I will know to change it. All right, as we're kicking this off, does anybody have any questions? Boy, we've got our numbers are going down and down, and I wonder what this is about. I guess this is a good time to reiterate that if you get value from this club, share it with a friend. We really, really appreciate that, and that's the only way this group grows, is through word of mouth. It's the only way it grows. So if you enjoy it, please share it with somebody else. I have actually tried putting it on social media. I get almost no uptake from social media. I don't know why in particular. We are currently broadcasting on X and YouTube. Interesting. We should be broadcasting on Facebook and LinkedIn as well, but they don't seem to be connecting. Let's see if I can add those really quickly. Okay, LinkedIn just added. Facebook is still working. But okay, Facebook is connected. Hello, everybody. So the only way that this show grows is by word of mouth. Even though we're publishing or broadcasting over social media, feel free to share this with a friend, reshare it on social media. Let's bring some more people in here, because at one point this club was getting 300 people a week, and at the moment we're sitting at around 50 to 60 has been our average recently. So All right, Manju says, thank you for arranging this topic. Looks like everybody's using the alternativeinvestingclub.com website to log in now. Eric is able to use it through Teams. All right, if you have any topics that you want me to bring into the Alternative Investing Club, please let me know. We've had a whole bunch of interesting topics this year. We've talked about how do you create a fund around debt validation. We've had oil well presentations. We have talked about how to invest in commercial airline assets such as airplanes or even syndications on airplane engines. How do you as an investor own a fractional piece of an airline engine? Today we've got another great topic, which is talked about a lot recently, and it's a very profitable area, and that is senior living. So John Halber, welcome to the Alternative Investing Club. I think we're going to kick it off right now, even though we're a little lower on numbers than normal. We've got about 40 people in the room currently. John, welcome to the group. Take a moment to introduce yourself.
Well, thank you, Daniel. My name is John Halber. I'm a entrepreneur, visionary, maybe visionary entrepreneur, but I've started companies since I was 7 years old. And in this particular area of senior care, I've been in the business for 9.5 years, first with Haven Senior Investments as founder and CEO. That is a consulting and advisory business for the senior housing and care industry. We are nationwide and have grown exponentially over the last 9 years, which allowed me to truly understand the senior housing and care market before it explodes. And as everyone knows, the silver tsunami is here. And today we'll introduce you to that market.
Right. So, let me share your screen. And if you are new here and you just joined, or if you just joined this meeting, go ahead and put where you're from in the chat. It's always good to know where the people are from. All right, John, your screen is yours to control.
Excellent. So I just want to point out that the views and the information presented are my own and do not necessarily represent the Alternative Investing Club. I'm sorry.
Let me also say that the Alternative Investing Club is just an investors club. We do not give professional tax advice, investing advice, or legal advice. And we're for investors, by investors, talking to each other about our strategies and bringing great speakers in like John.
Excellent. So today we're not introducing an opportunity for investment to you, but our mission within the companies that I own, including Haven Senior Investments and Haven Senior Living Partners, is to introduce everyone to one of the best investment classes today and for the next 10 years. And so let's start off by saying good afternoon, everyone. Today, we're diving into the current state and future outlook of the senior housing and care market, a sector experiencing transformation growth and tremendous investment opportunities. So let's go to the market highlights. Transaction volume surged, highest since mid-2022. 57% of investors anticipate cap rate compression. Occupancy fully recovered from pandemic lows, especially the secondary markets, which are just booming right now. And also the 80+ population is projected to increase and grow over 36% over the next decade. And so I did want to point out from one of the providers of data for the senior housing space, which is NIC-MAP, which is National Investment Center for Senior Housing, basically stated in Q1 of 2025 that their Q4 2024 data showed that occupancy had reached nationwide at 89.7%. But I did want to point out it's market by market, neighborhood by neighborhood, just like any type of real estate. Here are the transaction volume trends. Transaction volume stabilized at 15.6 billion in 2024. Portfolio transactions accounted for 43% in quarter four, and 2024 saw a record 703 mergers and acquisition transactions. And many of those transactions tend to be portfolio sales to the REITs like Ventas and Welltower and others that go in and buy big portfolios from regional owners and operators. And so, but we see tremendous growth going into 2005, 26, and 27 as the 10-year Treasury rate comes down. Any questions so far?
No questions so far.
Excellent, thank you. So when we talk about the valuation of any type of real estate, not any type, but most real estate, we look at the capitalization rates and the Treasury yields. And so cap rates initially fell to under 5% and later expanded 150 basis points based off of low interest rates in the 2020, 21, 22, and then the increase over the last couple of years. 97% of individuals surveyed from JLL expect stability or a decrease in the future. And senior housing cap rates increased by 16 basis points from October 2023 to March 2024. And that's based on CBRE's outlook on senior housing. So who buys senior housing? And it tends to mostly be private buyers, 57%. That was a decrease from 2023, but remember 2023 is when interest rates were extremely low. And so currently institutional investors only make up 12%. REITs make up at 8%, and debt providers make up of 33%. So as you can see, private buyers are a big chunk of those who buy, and the private buyers are buying anything from your 16 unit down the street commercial property senior living, all the way up to multi-hundreds of units that are found throughout the United States. So one of the things that we face from COVID all the way through now is when we had a pandemic low of 80.2%. It was very difficult during that time, even though the interest rates were very low. Most banks would not lend if the occupancy wasn't above 75%. But as you can see here in quarter four, 2024, in the primary markets, 88.2% occupancy currently, and in the secondary markets, which are the tertiary markets outside of the metropolitan areas, we're reaching 90%. And so this is the 15th consecutive quarter of positive absorption since the pandemic. And Nick expects that within 3 to 5 years that occupancy based on a lack of supply and high demand to be closer to 95 to 96%.
Hey, John, we have a quick clarification question on the cap rates on senior living. You mentioned that they were 5 to 6%, and we have a attendee who's wondering, is that for senior living in particular, or is that an overall market?
So if they take everything over the overall market, that would be the cap rate. But today, with the higher interest rates sitting at around 8%, 9%, you're looking at have those cap rates of those that have sold in the marketplace to be anywhere between 8.5% and 13%. So the older the property, the higher the cap rate. The newer the property, the lower the cap rate. Ultimately, what it comes down to is what is the underlying EBITDA number, and then you put a cap rate to that EBITDA number. And ultimately, when a buyer and seller are negotiating, they typically are negotiating off of that cap rate to the EBITDA number. Does that answer the question?
IBITDAR, is that a crossover to EBITDA from the mergers
Yes,
and
but
acquisitions world?
correct, but without the rent or the mortgage.
Right.
So
Okay.
the R is the rent. Okay. Any
That makes
questions?
you might want to explain that term really quickly for everybody.
Okay. EBITDA is expenses before income, amortization, depreciation, and rents. I
Gotcha.
didn't have it in the exact order, but that's those are the areas.
It's a mouthful.
That's all right. Okay, this is the rent growth acceleration. As you can see, pre-COVID, stable and predictable. And then the pandemic impact, it was really, really difficult, declining rent growth as occupancy plummeted. And then the current status is premium pricing has been established with average rents reaching $5,200 a month. And that's an increase of 22.5% pre-pandemic levels. And that hasn't stopped. Every year, the average increase in rents are around 5 to 8%. And so that's really different from multifamily, where you have declining rents in many areas. But typically, when you have a supply and demand issue that we'll show here in a future slide, you're going to have increases in rents that can take place within each one of these communities. Any questions? Okay.
Yes,
Yes.
we've got a couple here.
Okay.
Manju is asking, do you provide an end-to-end service for senior living?
So yes, through my other company, Haven Senior Investments, we are a consulting and brokerage and capital company. So end to end, we can take individuals from identifying a piece of land, doing the market needs analysis, identifying the need in the marketplace to determine whether or not there is a need for beds, and then taking them all the way through lease up and marketing and whatever it may be. But all those services can be found on havensenior.investments.com.
Okay. And then SS is asking, he actually was asking about your trend chart that you had a few slides back. Show the increasing demand after COVID. He's interested in how this lines up with the pre-COVID demand.
A great question. So pre-COVID demand, it was 2016, 17, and 18 and 19 were really robust. We were really heading up in regards to occupancy. There was a lot of communities that were built in 2015, 2016 that were being leased up. And when COVID hit, many of those that timed it incorrectly were hit really hard. So those who were coming out of the ground in 18, 19 were hit by 20, had a very difficult time for lease up. But those that had built back in 12, 13 really leased up pretty quickly. And keep in mind that those that were leasing up were dealing with the generation above the baby boomers, which is the greatest generation, and those individuals were coming into their 80s, and so there was quite a bit of need. So to answer your question, we're on the right track. 80, 85%, 86, 87% in many communities, and then COVID hit and threw everything out of whack.
All right. No other questions currently.
Excellent. Okay, so this is the most important thing here in terms of what's going on today. And then peak construction, peaked in 2021, 22, because interest rates were really low, 0% interest rate. Go out there, start building, do floating rate loans, and really be able to show really great numbers on paper. And so currently, with higher interest rates over the last couple of years, starts were down 68% in primary markets and 69% in secondary markets. Very expensive financing, elevated construction costs because of labor, along with tariffs coming up, currently here, and really drove those costs up. And the last development that I saw on paper, they were trying to build and then exit at around 650,000 a unit, which is unbelievable. The highest amount anything has ever sold in the United States was 525,000 a unit. So as you can see, the costs associated with building were tremendous. So with slowing inventory growth, it does aid performance of the existing properties. 80% of the existing properties in the United States are over the age of 25 years. So not only do we have an aging group of assets, but we also have a slowing inventory growth, which means that those current assets are just going to fill up very quickly, and we will be without units here within the next 3 to 5 years for our senior population. If anyone's from Canada, I received a call yesterday from a entrepreneur in the senior living space in Canada, and she informed me that there was a 6-year wait for assisted living units in Canada. That's not, I don't think that's everywhere, but in many areas of Canada, which means that within 5 years, we're going to be facing the same situation. So why are we facing that situation? Well, the 80 plus population expected to grow by 36.1% from 14 million to 19 million in the next decade. This demographic shift is just a huge wave of pending demand for senior housing. So as you can see here, this upslope of growth in that population, and it's not just here in the United States, it's Canada, it's Europe, it's Russia, it's China, it's everywhere in regards to the need for that senior population. So you're going to see, and we'll continue to see, technologies coming out that address this population, that address the needs, including, since you all are techies, including the Tesla's Optimus to Figure 3 is coming out that will be able to work in the home or work in the senior living space to take care of the lack of labor, but also a tremendous growth in our senior population. So capitalization rates by investment class. I'm just going to shut up and let you guys look at this. And if you have any questions regarding cap rates, this is where we're addressing that.
No questions right here. Actually, there's one question from Glenn. He saw another group's deal where they were quoting the cap rates as being quite a bit higher. They were targeting acquisitions of 10.5 to 11. And this was with Praxis. So they were out of California, although the presentation was nationwide. So I'm not sure how they're getting their numbers, but just a data point.
So if you remember, I spoke about 80% of the buildings out there are over the age of 25. So we're talking about Class C core, okay? And so you're looking at assisted living these are these are much lower than what we're selling them at throughout the nation. So typically most, if not all, because interest rates are sitting at the 8%, 9% in many cases, SBA being at 10%, we can't move properties in the marketplace today, to answer your question, that are Class C properties, even Class B properties. We cannot move them if the cap rate to EBITDA is not above 10%. So our typical sale is on average over the last year has been around 11%. So Praxis is correct in saying that that if their investment thesis is 10% or 10.5, they're right on in terms of where the market is today. Now, newer properties, brand new properties, luxury properties, they're lucky to get 8 to 8.5% today. 3 years ago, they were getting, 5.5, 4.5 cap rate around there. So does that answer everyone's question?
I think it does.
Cool. All right, unlevered IRR expectations. Most underwriters utilize the discounted cash flow analysis, and then the spread averaging 279 basis points between direct capitalization rate and unlevered IRR. And then you can see terminal cap rate spread is that. And typically, we're not seeing a 10-year hold on these. We're seeing anywhere between a 5 and 7 because of depreciation, and also because many of these properties are older. We're doing cost segregation studies and pulling the depreciation forward in that first year, which is really good for W-2 employees, because all of a sudden you're investing into an opportunity. You're pulling that depreciation forward. You can take that depreciation on your K1 and offset your W-2 income taxes. So it's I truly believe in passive investing. I truly believe in investing where you don't have hands-on, that you're going with someone who's reputable and good and has a great operator and is giving great returns to you. So inflation, who knows? With what's going on with tariffs and everything else, no one knows. And so very, very interesting environment that we work in today. But I wrote a paper on this that's coming out on LinkedIn. It's about how the threat or the increase or tariffs or whatever. The key is that we have a tremendous amount of treasuries coming due, that we need to drive that 10-year treasury down to a point where it could be refinanced and not cost the U.S. government so much money. And so that's why you see the 10-year going down below 4% today. Everyone I've spoken to is there's no way development or that investment takes place at a higher level without that 10-year treasury coming down to around 3.5. So we'll see if it gets there. We'll see what happens over the next couple of weeks or so. So, any questions?
No questions.
Excellent. What's the marketing time for senior housing? It is across the board. I mean, but ultimately, if you have a great asset with great returns that you can sell to a REIT, well, the REITs have all the cash in the world to buy these. They're going to close in 3 months. Typically, once we go to market with opportunities, typically it's going to be 6 months, but with underwriting and such, it's typically taking realistically around 9 months to turn these properties. And so maybe it's been decreasing, but we believe that once the interest rate environment gets better, the time to turn these properties will be much quicker. Investment opportunities and exposure. This is so let's talk about what is senior housing, and that's assisted living, independent living. Skilled nursing tends to be more on the more of the healthcare side. It's reimbursed by Medicare. Assisted living, independent living, and memory care tend to be more private pay or Medicaid reimbursement in many states, but assisted living has cemented its position as the most targeted investment opportunity. And those that were polled in the JLL survey this in 2025, they're looking to increase their exposure to the senior sector, and only 2 are not looking to decrease. I mean, it's one of the best asset classes to invest in, next to data centers, as CBRE reported in their latest report. So what are the concerns? Well, tariffs, as you know, it drives up costs associated with it. Many things associated with the senior housing space in terms of renovations or labor or whatever it may be. It's just interest rates are still very high. Access to capital can be difficult, and so how does that affect valuation? Well, many individuals came out of the ground at a certain time. They expect that they expected on their pro formas that they were going to be at a certain cap rate. Well, they're no longer at that cap rate, so it makes it difficult for those who haven't timed the market correctly. So investment class definitions: Class A, excellent quality, built in the last 5 to 10 years. Class B, 10 to 25 years, and those older than 25 years. Now, keep in mind that those that are built older than 25 years, it is in the best interest of those who own those to keep those up to speed in regards to design and colors and furniture looking good, because they may be competing with other properties that are newer than them. So it's still it's still a great class to be in, B and C. So don't always think you have to go into Class A to get the returns that you're looking for. Why senior housing? This will blow you away. In the next 5 years, well, we're now going 4.5 years, 550,000 units, and I'm not talking buildings, I'm talking apartment units, need to be built by 2030, or we're going to run out of units for our elderly population. The long-term growth is baby boomers, are starting to turn 80 years old. Most of them don't enter assisted living until 86 years old. So there's still this ramp up going on over the next 5 years, but it will, hopefully we don't follow in Canada's situation where they have a 5 to 6 year wait to get into senior housing. But $275 billion is needed to meet the growing demand of our elderly population. So I'll just let that sit with you for just a second so you can visually see what we're dealing with here. All right. So Haven Senior Living Partners, we specialize in values-driven real estate investments by acquiring and developing communities rooted in compassion, quality care, and lasting impact. And giving great returns to our investors. This is an amazing time to start looking into opportunities, syndications, other opportunities that may come across your desk in the senior housing space. The most important aspect of investing in senior housing is understanding who the operator is and their track record. It is not about real estate. It is about the operator. And if that operator doesn't care about those in their care and they're all about the money, walk away, run away, whatever it may be. But we want to lead into this market with integrity, experience, and a clear vision of the future. Thank you.
Okay, we've got a few more questions here. Mostly from Glenn and James. Glenn is asking, what's your assumption and risk level that you've tied to Medicare, Medicaid as a reliable payment stream going forward?
Ask me in a couple weeks. I mean, it's right now the tax bills in front of Congress and the Senate, and we, who knows if they cut Medicare and Medicaid. I just ran, ChatGPT 4.5 to understand what states are most at risk for Medicaid waiver reductions. Who's at most risk, and I'm trying to stay ahead of it, but I don't think they want to lose political capital by messing this year with Medicaid and Medicare. Medicare takes care of nursing homes and rehab, and then Medicaid takes care of the very poor, and that typically is done through Medicaid waivers at the state level. Does that answer your question?
I think it does.
Okay.
Let's see here. James is asking, what percentage of these retirees will want to stay at a retirement home?
So if we can get out the report to all these retirees that actually their mental health increases and their love of life increases, and they seem to have purpose when they enter a wonderful values-driven community. Then more than the 10% to 15% that currently enter would enter, but a majority of individuals really want to stay in their home or with their families. So we have a multicultural country, and many cultures, such as the Indian culture, the Hispanic culture, tend to keep their parents within that family structure. And so we typically, when we look at a needs analysis of a particular area, we're looking at about a 13% rate of acceptance into the senior housing space. But keep in mind that memory care is and assisted living are very needs-based, and that's why it makes it such a powerful investment. Is that there will always be a certain percentage of the population that cannot stay at home. They absolutely need to go in and have care from caretakers and meds, taking their meds and being fed and being bathed. And so we don't, and with the decrease in supply and the increase in need, I'm not worried about us not filling the communities throughout the United States. I'm worried that we don't have enough, and that families are going to be hit with having to take care of their parents when they don't have the capability or the know-how on how to do that. Does that answer your question?
Yeah. Jenna is asking a good question here. What's the risk level with qualified employee base and turnover rates?
Great question, Jenna. I mean, the bottom line is that what we see is that if we take care of our employees and we know their name, we know their name, and we know their families, and we know the situations that they're going through, and that they feel that they're known and they're seen and they're loved, the turnover goes way down. Okay, if we pay them a living wage, it goes way down. If we really care for them, we tend not to have as much turnover. The turnover happens when an Amazon comes into town, a warehouse, and starts paying $25 per hour. That tends to then drive up costs for certain communities. But ultimately, if we take care of our employees and pay them a living wage, give them insurance, make sure that their family life is a good life and they're not stressed out, we tend to see them not being turned over, because they really get into the business because they truly have great hearts and they want to take care of people. They have that caretaking heart. And so let's take care of them. Let's take care of their mental health. Let's take care of making sure that they can pay their bills. And if they do, we got great employees that then turn around and take care of our residents at a very high level.
Mm-hmm. Glenn is asking, what do you see as an exit strategy when boomers, the largest percentage of population, expire? Will there be an overbuild scenario?
Great question, Glenn. I don't think anyone can look past 5 years with artificial intelligence and longevity and reprogramming ourselves to anti-age. I can't even look 5 years from now. I listened to a podcast called Moonshot with Peter Diamandis, and the things I hear on there of what's about to come is just blowing me away. So I don't know. I can't tell. And if many of these communities that currently are obsolete are being turned into drug rehab communities. Could be that these communities are turned around to be for those who need apartments and are low income. I don't know, but that if it's a good building, it's going to be repurposed somehow.
I almost forgot that you were the one that recommended to me the Moonshot podcast. I started listening to that, and I'm enjoying it as well.
Excellent. Good.
Manju is asking, how do passive investments work for this? How do passive investments work for this type of investment? Meaning, do people pay in and then wait for payouts? Go ahead and describe what it's like from an investor's point of view.
Oh, so there's so many different investments. I mean, you can invest passively in REITs like Welltower and Ventas on the stock exchange, and do very well just passively. If you really want to invest in a particular syndication, those range, those have many different terms. All I can say is that the one that Haven Senior Living Partners is currently doing can be found at slinvestors.com. I'm not here to push the opportunities that we have, but I did want to say that there's three areas that you can passively invest in REITs, you can passively invest in syndications, or you can get into an investment group that goes into a GP position where you could be in a GP position with someone else, and then push that out to LPs. And so that can be a more active, but passive because you're hiring an operator to operate the communities for you. The other areas, that's about it. I mean, that's typically you're either hands-on or hands-off.
We have some extra time here. Why don't you go ahead and describe exactly how you work with people? I know you just said you're not here to describe how to do that. Go ahead, let people know, how they can work with you, and feel free to put your contact information up as well.
Yes, but you can go to Haven Senior Living Partners, Google us. You'll see, a lot about Haven Senior Living Partners, what we've done. You can go to LinkedIn, see our page there. You can reach out to me on LinkedIn at John Halber, Hauber, and you're going to be able to see me there. Let me give you not a typical, but one that we are working on right now. It's a syndication, 2 communities here in the state of Texas. 98% full in markets that are in counties that are, one is 78,000 residents, the other 48,000 residents. If an LP invests 100,000, they're getting 2.7 return on their money over a 5-year hold period. It's a 9% pref, 70-30 split, and a 25% IRR to the LP investors, and that can be found on Haven Senior Living Partners. What's beautiful about this is between 2018 and 2022, there's a program out there through the Housing and Urban Development called the 232 loan. And through that loan, individuals were able to refinance or finance their communities of anywhere between 2.2% and 4% between 2018 and 2022. This one that we have has a fixed rate for 31 more years at 2.46 fixed. So we believe, and I've written papers on this, we believe that the only way to invest today is invest in opportunities that have fixed rate, no floating rate, fixed rate for many years, because we do not know what's going to happen to the economy. But if we can come into an opportunity that's at 2.46% for 31 years with non-recourse, love it all day long, and it really stabilizes our debt load. But it also, we're going into communities where they have instant cash flow that pays our LP investors on a quarterly basis. Does that help, Daniel?
Yeah, I think it does.
Okay.
And we've got a few more questions here also. Let's see, from Brian. Rent growth due to supply demand makes sense, but aren't a lot of seniors on fixed income? Actually, Glenn's question here was where I was going about getting paid, and how at-home care compares to assisted living. So, two questions here.
Yep.
Yeah.
Comparing
home care. Go ahead.
Yeah, great question. So typically when an operator brings in a family, the first question is where's your money coming from? And you'd be amazed, 50% of a resident's rent that's being paid for the assisted living or memory care unit is coming from the family itself. And so, first of all, the community is going to bring in the Social Security directly into the community to pay for the resident. You may have pensions or other things that come in. You also have the value of the house. So many individuals use reverse mortgages so that the individual not going into assisted living, the spouse can stay in the home while the money can be pulled out of the home to pay for assisted living. But typically there is a crisis that we have on our hands, and that's the middle market. And the middle market don't partake in the Medicaid reimbursement waivers, and they are not rich enough to go to pay market rate. So this middle market is at a crisis, and we as a community of thought leaders within the senior living space have no idea how we're going to deal with that. And that's the crisis we have in America today. I think in Canada, what I heard from when I mentioned before the entrepreneur, they were putting accessory dwelling units in the back of yards, putting the middle market elderly into those units, and then bringing services to them. So if anyone can figure out the middle market and figure out how to do it in a modular way or any other way, is going to make a lot of change in this marketplace and make a lot of money at the same time.
Terry is wondering, how do you mitigate the problems that occur when Amazon is coming into the employee market around your living center?
Well, what we've heard is that individuals go into Amazon and work in the warehouse and they get paid, but they don't feel like they're working for a purpose. And so what we try to do is we try to be at market rate or below, but allow them to walk away from work every day knowing that they've impacted someone's life, and they're just not putting goods on a purveyor belt and whatever it may be. But yes, individuals really need to have a living wage to be able to be less stress in their lives, be able to take care of their families. And you'd be amazed, most caretakers are single mom with kids. And so I have a podcast called the Senior Housing Investors Podcast. I've spoken with operators around the country on that podcast. I've spoken to investors. I've spoken to the biggest operators in the country. And ultimately, what we believe in is that when we start developing here in 3 years, we're going to have workforce housing that caretakers and their families go into, that we have daycare on site, that we have communities that are intergenerational in nature. So if you go to my LinkedIn page at John Halber, you'll see some of the articles I've written in regards to what the future is, the future of humanoid robotics, the future of intergenerational longevity and wellness communities. Ultimately, we're dealing with the baby boomers. And if you guys some of you are as old as me, you know how much they want to live in communes. And so we want to build these 40-acre larger communities that everyone is working together for the betterment of everyone else.
All right. Peggy has a question here. Most billionaires in this country have their hands on real estate. Why isn't it they haven't jumped on this opportunity yet?
Many have. Those who, there's a lot of opportunity out there right now. The big thing is data centers, right? Data centers or warehouses. But it's interesting after coming out of COVID, when all the media was talking about how people were dying in these communities or dying in nursing homes. I mean, it's taken around 3 to 4 years to really get occupancy back up. But I truly believe that the more that individuals like myself communicate out to individuals like yourselves about not only the need, but the supply and demand issue that we have, and the greatest opportunity for investment, not only in the last 20 years. So if you really look it up, senior housing has been one of the best investments over the last 20 years, but going forward for the next 10 years, that's as far as I can look out. 10 years, at least 10 years, it's going to be one of the, next to probably data centers, it's going to be one of, and artificial intelligence. It's going to be one of the greatest investments that we can make. But the thing is it's really impact investing. It's societal impact investing. So when you invest, you actually feel good that you're actually investing in something that is taking care of the least of us. And so instead of, oh, it's just an investment, now it's like, oh, I'm investing in making society better.
All right. And Manju is asking, can senior living buildings be converted to apartments for general use if seniors are not living there? Are they convertible to other classes?
Yes. So as I've said before, they can be. Really, we absolutely need to convert those older buildings, even school buildings. So let me give you an example. They're closing like 3 or 4 different elementary school buildings in Plano, Texas, because everyone's moving up to Frisco, Texas. Well, those school buildings can be converted into residential units, those classrooms, whatever it may be, and then so I truly believe that repurposing of buildings is an amazing opportunity for those who want to get their hands dirty and want to get involved in repurposing. There will come a time that there is not enough housing. The affordability crisis is already amongst us in regards to buying a single family home. There is a tremendous amount of single people out there that don't have kids that need housing. So we've seen, and you go to our podcast, you'll see that we interviewed an individual who was building purpose buildings, cottages that had 4 different bedrooms, master bedrooms with a center area for getting together, kind of like student housing, but for single women over the age of 55. So all these models are coming out to create affordability for housing in the United States right now.
All right. And then last question that we have here, SS wanted a little bit of a refresher about which areas do you actively get involved in? You're obviously involved in the financing, but are you building, acquiring, and how does your role play into the group's role?
So there's 2 sides. Haven Senior Investments is one of my companies that I have 3 other partners in. That's at havensenior.investments.com. That is the consulting. So we consult all the way through the process of building, acquiring, whatever it may be. Then we have a brokerage that helps families and institutions sell their communities to the marketplace. And then we have a source of capital from different providers that we help our buyers source that capital to buy whatever they come across. Our website at Haven Senior Investments gets 253,000 visitors to it per year. We're on the first page of Google for anything to do with senior housing. So it's a very educational website that has a tremendous amount of information. Haven Senior Living Partners is only focused on acquisitions and ultimately attracting capital to do those acquisitions, but also in the future, here in a couple of years, to go and develop senior housing in particular states that we love, like Texas and Tennessee and Arizona, and North Carolina, South Carolina, Colorado. These are these are the states with the highest level of migration and the highest level of individuals over the age of 75 that live there. Florida, California are fairly difficult. Florida for storms and insurance, California with regulations. So those are the 2 tougher areas, along with New York City with a high tax rate. So hopefully that answers your question.
Okay. Well, thank you very much, John. We don't have any more questions here unless a last minute one comes in. Thank you for coming to the Alternative Investing Club. And since we don't any longer have the ability for our audience to take themselves off mute and say thank you, would say, can you put your thank you into the
Thank
chat?
you.
Let John know that he was appreciated for being here. Thank you very much, John.
Thank you.
And go ahead and check out his website. And we will see all of you back here next week. We'll be talking about retail spaces with Rockstep. So we hope to see you all there.
Thank you. Thank you, Dan.